Hello and welcome to another episode of The Big Perspective, where we talk to some of the smartest minds in the Indian markets and pick their brains about the biggest trends shaping the Indian markets.
More than 95% of the listed real estate market.
I'm your host Bhavya Dua. In today's episode, we have Mr. Alok Aggarwal, MD and CEO Brookfield's Indian Real Estate Trust, and Preeti Chheda, CFO of Raheja Corp Investment Managers Private Limited, which is a manager of the Mindspace Business Parks REITs. And today, with them, we are going to discuss REITs 101. What are REITs and why are they actually booming in India? And a big picture comparison of the Indian landscape with the US and the rest of the world. If we compare, let's say, to the US markets, then this episode is for you. So let's get going. So very warm welcome on The Big Perspective, Alok and Preeti. Thank you so much for taking out the time and discussing all about REITs with us. So what we'll do is we'll basically just discuss a REITs 101. For anyone who is watching us and wants to understand basically what a REIT is and how do they want to invest in it, so that they have a complete clarity on, it's a complete masterclass with you two for REITs today. Sure. So we'll start with you, Alok. So what are REITs and why are they actually booming in India? Why is everyone talking about it? Let's start with that.
So REITs is a very interesting concept, and of course globally it has been there for the last 40 years. India is just kind of a catching up. And just to say, India today has 4 REITs. 3 are office REITs, 1 is a retail REIT. It started in 2019, they're catching up. And what does REIT do? REIT lets you participate in the growth of commercial real estate in India, and I'm talking about commercial real estate right now, it could be any other asset class also, without owning these assets. And so how does it work out? Investors can pool their funds and REIT would assemble, kind of a number of assets, and these assets, they have tenants who take space on these, and whatever are the cash flows or the income generated in these REITs, that is distributed to these investors on a quarterly basis or a 6-monthly basis. The mandate from regulator is that they have to be distributed on 6-monthly basis, but all REITs in India are distributing these cash flows on a quarterly basis. So what's the advantage here? One thing is that an investor is assured of a quarterly return, which is almost about 6 to 8% of a invested capital. And it is tax efficient also. That is one thing. Second thing is there is also a return from the growth of cash flows. And this growth happens because all of the leases which are signed, they see about 5 to 8% of a contracted escalation.
Okay.
The market is also growing, so rentals also keep going up. So REITs, you earn returns via regular dividend yield, regular cash flows, and a growth. Okay. So that is one thing. Then REITs, actually, how to define? This is a product between debt and equity, and it's a very stable, diversified, de-risked kind of a product. And it's a great product for creating a passive income. While the returns in REITs could be slightly lower than stocks, or I would say equity, but they're definitely more than debt because there's a fixed component as well as a kind of a growth, but the risk profile is much lower. So this is in a nutshell in terms of how the REITs pan out. When you look at kind of a REITs could be commercial office, they could be commercial retail, which is India right now. We can have data center REITs also. We can have hospitality REITs also. So depending on asset class, we can pull them together and kind of a income stream could be generated. That is one. Now, why is REIT getting very popular in India? I think that is something we should understand. One thing is they have come up in the last 5 years. People who want to create a passive income love them. The risk is much lower. But India, and I would talk about India as a commercial real estate, India is a office to the world. India is a number 1 country in outsourcing. We have a 51% market share globally. So most of the large companies, they want to have office in India. So these companies, when they come to India, they need office space. Annual leasing in India is happening to the extent of 80 million square feet.
Okay.
So these companies take office space and these assets could be pooled together and a REIT could be created. So that is also driving the popularity of REIT. I'm saying in office. Of course, there could be retail REIT, there could be data center REIT.
Correct.
But India having its a niche position in outsourcing needs a lot of office space.
Correct.
And that is also driving, kind of people are talking a lot about REITs. Now people are talking about GCCs, Global Capability Centers.
Correct.
Today we have almost 100 Global Capability Centers opening in India every year. Now all these Global Capability Centers need office space.
Right.
Then we have tech companies, they are growing. We have Indian companies, we have global companies, so they need office space. Then, Indian GDP is booming, almost 7%. So they need office space.
Correct.
So that's a demand for office space is growing. Of course, retail is also doing pretty well in India. REITs in India is largely dominated by office right now.
Correct.
So this is how, REIT is kind of proliferating in India.
Got it.
But just to say, globally there are 1,000 REITs. India has just 4 REITs.
Right.
Globally, the REIT market cap is about 2 trillion. In India, the market cap of REITs is about 12 to 15 billion US dollars. So just imagine the kind of a growth potential
We
REITs
here
have
in
had.
India. Correct. So I'm going to ask a very stupid question before I actually divulge into a lot of things that you have mentioned here. A lot of people, when they think about REITs, who don't really know what REITs are basically, if I want to invest in a real estate, because real estate is booming in India, should I buy a physical real estate, own a physical real estate, or should I invest through a REIT? So how do you compare actually buying a physical real estate versus a REIT?
So this is a product which is very similar to a mutual fund.
Correct.
The way we invest in a mutual fund, that's exactly the way you invest in REITs. You can just buy one unit of a REIT like a stock. Just go on the exchange and buy. So today if you want to buy any listed company, you just go on a stock exchange and you can buy just one unit. It's the same way that you buy units of REIT. It's very similar to mutual fund structure where you have a listed trust. You have an asset management company, so you have your investment manager here. Because it's a trust, so you have a trustee who is in a way having a fiduciary responsibility of looking an oversight role. And then of course you have the properties which are sitting in the SPVs below. Today of course Indians are very fond of real estate, whether be it residential real estate or commercial real estate. Everybody wants to own real estate, and that's where REITs actually come in handy. So what happens is in a commercial real estate, when you're owning a commercial real estate, you really need to worry about maintaining that real estate, leasing out the real estate all the time, because your leases could be say of a 5-year period or a 9-year period depending on who you've let it to. It could be even shorter sometimes, because if you're owning a small property, say just a 10,000 square feet, not necessarily you may get a large tenant who will want to sign long-term contracts.
Right.
You can get a smaller tenant who may want for a year or 2 years or 3 years. So you have to continuously keep releasing that space. You have to worry about the maintenance, you have to worry about collecting the rental. All of that has to happen. Whereas here, we exactly do that for you. So you have an investment manager, you have a property manager. These are the ones who are expert at managing commercial real estate properties. So they actually do this job for you. So they are the ones who make sure that the assets are leased, the rents are collected, and then the rents are distributed. And these are a set of professionals who are managing these assets. And today, because we have large portfolios, could be 20 million, 30 million, 40 million square feet portfolios, you have a lot of benefits of the size. So if essentially today, if you see our portfolios, 60-70% of our portfolios are MNC, large multinationals. Now, in fact, you're having a lot of large corporates also which are taking place, as and when you have more of Make in India happening. So a lot of manufacturing sector which is also taking off huge spaces. So we have the advantage of having long-term contracts which could be 9 years, 10 years, sometimes even longer. So you have recurring cash flow. So you really don't need to worry after a year or two who do you lease again to, because these are long term. And as Alok mentioned, there are contractual escalations built inside the contracts. So you have 5% annual escalations. So every time, say you started with a 100 rupee rent, the rent next year would move to 105 and then so on and so forth. And when it comes for termination, say after 9 years, so then what happens generally in India, the inflation is run more than 5%.
Right.
So there's a rent catch up which needs to happen at the end of the 9-year period.
Okay.
So that's the reason while the contracted rentals are 5, if you see a long-term 9-year period, you actually are able to achieve anywhere between 7-8% growth. That's because the catch up with inflation has not happened for the 9 years.
Right.
So you get that releasing spread which comes at the end of 9 years. And liquidity. So today if you want to just exit a commercial office space, it's not that you decide you want money overnight and you can just go and dispose of a office asset.
Right.
It's not going to be possible. It's going to take a couple of months. Here it's so very simple. You decide in the morning you want to create a liquidity event, you just go and offload that on the exchanges and you get liquidity. So I think that's a very big advantage, because you're able to now convert an asset which otherwise is not so liquid into an absolute liquid instrument. So I think that's one very big advantage, and you're getting all the benefits of actually owning a real estate and at the same time diversifying.
Basically not having all your eggs in one basket. In
Absolutely.
terms of
So that's the way I would say is a key differentiation between owning a commercial real estate versus owning a REIT.
And also, like, what is the minimum amount I need to invest in a REIT?
For a commercial real estate or real estate if you want to buy, you have to invest a bomb.
Correct.
In REIT, you can buy one unit, which could be of 300 rupees. So you can start with 300, you can start with a minimum lot and keep adding it actually. In REIT, transaction costs are almost nil actually. When you go and buy in the exchange, the transaction costs are nil. Whereas if in a commercial real estate you want to buy, you have to pay a brokerage.
Correct.
You have to pay stamp duty.
Correct.
Then you have to hold the property.
Yes.
Then you have to pay property tax and everything.
Maintenance of the
Maintenance,
property
everything.
as well.
So actually, if you ask me, and you're just echoing what Preeti has said, there's no kind of a comparison between owning a property and buying REITs. I think best thing is close your eyes, go and invest in REITs. And I can tell you, not only retail investors, even for large companies, it's not easy to buy, own, manage real estate. It's not easy. It's very, very difficult actually.
Got it. That's why a lot of companies are also even going for managed workspaces or co-working spaces, because even for their own office, it's really difficult to manage or maintain your own office premises for that matter. But if I want to, let's say, invest in a REIT, what are the different ways I can invest in a REIT?
Yeah, so I think it's simple. You know, whenever the IPO or the initial public offering happens, that is one time you can invest. That is where you can start with. Otherwise, you know, you can go to stock exchange and buy the REITs.
Right.
But I would say REIT is, you know, how I always say is it's not stock versus REIT. I say REIT should be some part of a core portfolio should be REIT actually.
Right. And there is no minimum holding period, right?
No. So if you hold for less than a year, then, and if you sell within the year, then it's subject to short-term capital gain tax, similar to your stocks.
Correct.
And if you hold for more than a year, then you pay long-term.
It's like it is for any financial instrument out there.
Correct.
So there's nothing, no minimum holding period,
similar.
no minimum amount that you can come up with.
No, you can buy today, you can sell tomorrow.
Correct.
That's absolutely your decision.
Correct. So in that case, when we look at these dividends or with these capital appreciations, how does that actually turn around in terms of returns for the customers?
So as I said, REIT, you know, slightly below kind of equity, but of course the risks are not there.
Correct.
Now, in terms of distribution, about 6 to 8% of annual return you can get. Large part of that is tax-free. I think that's the one big advantage people kind of miss out. 6 to 8%, large part of that is tax-free. And then in terms of growth, you know what Preeti explained, that there these centers, escalation clauses are built up, and then real estate markets, the rental growth also happen. So about, I would say 6 to 8% growth in rentals you can get from there. And all this can get distributed. So total return could be in upwards of about 12%, I would say. 12% per annum, out of which 50% you get distributed, 50% keeps, you know, part as a growth. So that's the profile, I would say, for all REITs. When you compare with equity, it look lower, but I think that has to be lower because the, you know, there's a diversification, the risk is lower. When you compare with debt instruments, of course, it's much higher. So that is one. Second thing is, you know, I would say, while yes, REITs are a hybrid product right now between debt and equity, while its performance is linked to market, but the cash flows are pretty stable because leases, as Preeti said, are long term. Tenants put capital to do fit outs, they can't get out. So tenants stay there, and all these tenants are grade A companies with very strong cash flows. So I would say returns to the tune of about 12%, diversified, very low risk, and backed by strong fundamentals.
So Alok also mentioned about how there are thousands of REITs globally, but only 4 in India. What have the challenges been like for REITs to operate in the current landscape? And do you think, are there any risks also that associate with those challenges?
So I'll just tell the way REITs work internationally. So irrespective of what the asset classes, all get categorized into REITs. So just to give you an example, whether it's a residential REIT, office REIT, or any other infra asset, globally everything is called a REIT. Now in India, we have 2 models. So we have a REIT and then we have an InvIT. InvIT is an infrastructure investment trust, REIT is a real estate investment trust. They're very similar in terms of the framework and also the regulatory framework, not just the construct, but even the regulatory framework. The only difference is the asset class. So if it's a real estate asset, it falls under REITs. If it's an infra asset, it sits under InvITs.
Correct.
So that's the reason you have this division. So if it's, say, for example, transmission lines or roads, then it's under InvITs. Or if it's an office or it's a data center, or for that matter, it's a shopping center, then it's sitting under a REIT. Now, for example, we started in 2017 with the first InvIT, and the first REIT came in 2019.
Correct.
Today, there are 25 plus InvITs, and we have about 4 REITs. So together, if you see, we are almost close to 30 REITs and InvITs put together, if you were to just compare with what's happening globally. And I think the fundamental thing is the kind of assets which we are managing today. So today, between REITs and InvITs, we have almost 6.5 lakh crore of assets under management.
Okay.
So this is a scale which has been achieved for these products in just about 7 years. So I think that's a big feat to have achieved for a product which has been relatively new to the Indian market. Just to give you one statistic, if you look at US, for example, REITs constitute more than 95% of the listed real estate market.
Okay.
In India, it's just about 12%.
Right.
So effectively, any real estate company in US is a REIT. That's not the case in India. In India, we've just started. Today, we have 12%, which is listed REIT space amongst all the real estate companies. But I'm sure over a period, as more and more assets come to play, you'll see this percentage increasing. So that's the Indian story. So it's not that it's just 4 REITs. There'll be many more REITs which will come. But it's just that it's been a 5-year journey for us. And I think in 5 years, if you were to look at our AUM, which is under management for the REITs, is a good 1.4 lakh crores, which is not small by any stretch of imagination. And this will keep growing as you'll have more and more players entering this segment.
And people talk that Nifty will reach this particular target, Sensex will reach this particular number. So in that case, when we are comparing REITs in India to the global standards or to the US, where do you think we will be 5 years down the line?
I think one big differentiation between international markets and India is there are certain asset classes. So for example, in US, residential REITs are really big.
Correct.
And that's because in India, we have the frenzy for owning real estate. There, people are very comfortable leasing real estate.
Yeah.
Now, here what happens, because you are owning real estate and you're not leasing, so the whole residential piece is effectively out of REITs. Because under REIT, you need to have a real estate asset and you should be generating rental income from that asset.
Correct.
The moment you are not generating income, because everybody is owning residential, so a big segment of residential today is out.
Correct.
Maybe as the economy evolves, as things get more and more mature, you will have people wanting to lease residential real estate than actually going and owning real estate. So that big piece is in a way out. But of course, office and the other asset classes like shopping centers, these are things which are very pretty much common. The real estate companies that we are talking about, most of them are residential real estate companies. So today in India, if you look at the large real estate companies, they are predominant residential asset class owned. So these will continue to be out of REIT because today residential, if you're selling residential, you can't get them into the REIT. Only if you're leasing residential, then they find place under the REIT structure.
Got it.
So therefore, today you are seeing a lot of real estate companies, while listed, are not part of the REITs. And the commercial entities, everybody who's owning commercial real estate and have that size, are slowly moving into REITs.
Got it.
But I think what Preeti is saying, probably we should expect, and for Preeti, correct me if I'm wrong.
Yeah.
At least I would say 2 REITs every year we should see going forward.
Got it.
And let's not even forget that we have once in a lifetime COVID kind of impact.
Right.
Otherwise, probably this 4 number could have been slightly different. But of course, REIT doesn't have a index, so you cannot say that 50,000 will become a lakh crore. But I think REITs is more about size and scale.
Correct.
And regular distribution. That is where REITs come in. Right. I'm getting a regular income.
Yeah.
So,
and I think with the way the country is seeing urbanization, every urbanization is going to create so much of commercial space. And therefore, this segment is just going to get bigger and bigger because with so much of urbanization happening in India, the space is bound to get bigger. As we are seeing, most of them who earlier used to do strata sale. So people used to build commercial assets and used to sell commercial asset floor by floor. Now people are seeing merit in holding assets, and especially when you have REIT kind of products which are available, which give an opportunity to a lot of asset owners to churn capital. So today you don't really need capital locked into these assets. You can build the assets, you can give them to the REITs, you can unlock that capital and recycle that capital. I think that's a very big advantage that the country is seeing.
So also a personal doubt here, when we talk about commercial spaces, then we talked about residential spaces. Is industrial or manufacturing spaces a different category, or is that a part of commercial?
No, so I mean, industrial, manufacturing, will keep it separate. Commercial, we will say commercial office, and then retail.
Correct.
Of course, the difference between, so commercial real estate, of course, that's the largest AUM.
Right.
Followed by retail. India needs about 80 million square feet of a office every year.
Okay.
And this number is growing.
Correct.
So just imagine the amount of capital commercial needs. And that's why in India about the retailable assets is in office is about 400 million, but total property is about 700 million.
Okay.
Whereas in retail it's about 100 million. So the capacity to deploy in commercial is much more.
Got it, got it. For example, commercial, industrial, retail. As an investor, does it matter to me what REIT I'm investing in?
One thing is, if I want to invest, I probably need to understand the asset class. Now, it's commercial, maybe I need to understand if I'm comfortable with that. Income generating capacity of each asset. That's something mota I should understand. Then I should also understand what's the risk profile. If the tenants in commercial, are they sticky? Can they walk away? Can they stop paying rents? Can the occupancies go down? Similarly in retail, what can happen? Can tenants walk away? Can the vacancies get created? I also have to understand what is the levers of growth in each assets.
Correct.
So
could you lay these down for us? What are the levers for growth in both? What are the risks? And what kind of incomes can we generate from both?
Let me talk about office and retail. In office, as I have already said, that's a maximum pool where the investment can come in. Large companies are taking office and the risk profile is very stable. In retail, there are smaller tenants also.
Yeah.
There are larger tenants also and smaller tenants also.
Correct.
But the bargaining power of retail tenants vis-a-vis mall owners is slightly more actually.
Okay.
So, for them to, kind of hold on the rents as what we have seen in COVID is slightly more. So risk profile in retail could be higher, the returns could be more volatile.
Okay. And while I was doing my own reading, again, just trying to understand REITs, so even I have done like my sort of reading to understand what this space basically is. I was coming across at different types of REITs, ki hybrid, debt REITs. Could you take us through what are the different types and what do they actually mean?
So in India today, as I said, we have three categories of REITs or InvITs, as I'm interchangeably using them. So you have infrastructure trusts, which are called InvITs.
Correct.
Then you have the real estate trusts, which are called REITs. And then SEBI has come up with another format, which is called small and medium REITs, which we call SM REITs. So today you have only three forms of REITs. Of course, internationally you have other forms of REITs like mortgage REITs and so on and so forth. But in India, SEBI has still not come up with those. But today these are essentially the three formats. And as I said, InvITs deal with infra assets, REITs deal with real estate, and SM REITs are also dealing with real estate but smaller format. The gross asset value, as we call, that's about 500 crore. So if you are a REIT between 50 crore to 500 crore of value of assets, then you sit in SM REITs. Otherwise, you are sitting in the mainstream REITs.
Correct. And also on the question that you were addressing before this, can we also see diversification into data-centric spaces and warehouses when it comes to REITs?
Absolutely, that's possible. I think globally we already have REITs, data center REITs, logistic REITs.
Right.
So India also that's going to come up sooner or later. But I think India is way ahead in terms of, I would say again,
commercial,
same thing I keep office way ahead in terms of office, way ahead in terms of retail.
So for the outsourcing we are getting in terms of services, correct.
So data center is opening up. So don't be surprised, we have many data center REITs coming up in due course of time.
Okay.
Yeah, and if I were to just add to what Alok said, so today even in the existing REITs, one of the REIT actually has data center assets which are sitting inside the REIT.
Okay.
So you have that beginning which has already happened. Similarly, on the warehousing side, you already have one warehousing InvIT which has already got registered. So you have these asset classes, gradually moving into these spaces.
Got it.
And just what Preeti has said, see what also would happen, some of the investors, they would like to invest in a one kind of a REIT. As an investor, I may not be, kind of a right now what it's fine, some of the data center assets are setting into commercial, but largely it's a commercial REIT.
See, also if you look at internationally, you have single asset class REITs and then you have composite REITs. Composite REITs generally are a mix of 2-3 asset classes. And if you look at the way commercial developments are now happening across the globe, you have a lot of integrated developments which are happening. So you, for example, say have an office and a hotel sitting on top of an office, and then you have a mall which is underneath. You have so many of those models prevalent across. You have to go to Singapore, US, anywhere. You're seeing all the commercial assets are now becoming very composite asset, and exactly for the reason that Alok mentioned. And I think in India also, more and more as you move forward, you will see lot of composite assets which are coming into the REIT space. So while office may remain a predominant asset class, but you'll start seeing a lot of composite assets which are now being built. And I think that's the way the country's infra also will start shaping, and everybody will want to see those kind of formats coming in.
Those will become necessary in a way for them to provide around. So when we talk about residential, again, what you mentioned there, that in India a lot of people want to own residential spaces, and the leasing culture is hardly there. So do you think it's just the investor behavior which is kind of stopping the residential REITs to be there, or is it a mix of investor behavior plus regulatory issues around that?
The REIT as a concept is very clear. You need to own an asset and you have to generate rent out of that asset. So that principle is laid down very clearly. So you can't sell, you have to own and rent. As far as you are satisfying that criteria, any real asset class can fit into either a REIT or an InvIT, depending what asset class it's it. The issue is only when you're actually selling, which is what is happening with residential. And in India today, everybody wants to own. That's been our, I would say, our culture, or that's the way we have been brought up, that we should own real estate, and everybody likes to own real estate. In the generations to come, maybe the thought process will change. The young generation will be far more amiable to not actually buying real estate, but wanting to rent.
I think people in our generation still really want to own a real estate.
So that report,
Gen Zs are buying their first homes before millennials did.
So if everybody is going to buy, then obviously they don't fit into the real REIT framework.
Got it, understood. We also kind of touched base upon what SM REITs are and how they're normally different from a regular REIT. So if as an investor I want to decide which REIT I should invest in, how should I actually weigh both of those things? What are the factors that need to be incorporated in which REIT I should invest in?
Regular REITs are already there, 4 of them, as you've discussed. SM REITs are just starting up actually. Of course, we saw one REIT, I saw about a week back. I don't know whether it was listed or no. But I think few things we have to consider. Investing in regular REITs is pretty easy, and it would be easy for SM REITs also, but in SM REITs you are taking concentrated bets. So it's not a pool of assets. There's probably just one asset. And those people who want to invest in a particular asset or who want to invest in a asset in a particular micro market, but the risk there is diversification is not there. While because of investing in a particular asset, my return could be higher. I would get a higher return. That is very much possible. I have chosen an asset which returns are higher. But I think the diversification, de-risking is missing in SM REIT. That's what my sense is. SM REITs could give concentrated bets, higher returns, but they also could be more risky. Whereas in regular REITs, you kind of keep adding more and more assets. And SM REITs, each asset, it's like a mutual fund. One asset, you launch one scheme. For another asset, you launch another scheme. Regular REITs, you pool up, you keep growing the aim of that particular REIT. I would say very well diversified, very well diversified. Quality of tenants, in general, my sense is, quality of tenants would be far better. In general, I'm saying, I'm not saying always, but could be far better in regular REITs. Risk could be much lower.
Got it.
Returns could be slightly lower, I'm thinking, but I think that's okay. That's my sense.
Because that's the risk return.
That's the risk return, I feel. Of course, SM REIT has to play out, I think. Let's see how does it play out.
And as Alok rightly said, it's at the end of it, choices given to the investor. They have to decide to invest.
Got it. Also, again, another very dumb question. Can a similarity be drawn between SME IPOs and SM REITs and regular IPOs and regular REITs? How
Yeah, I mean,
exactly
if
it
you
works?
talk about the size, then
Yeah.
yes, because these are relatively smaller formats versus the large formats. But I think the only big difference is here at the end of it, you have tangible assets.
Correct.
So you're not just talking about numbers which are forecast. Here you have tangible assets, and they could be leases which could be for smaller duration or longer duration, even with the smaller formats. So I think the predictability of cash flows in either model is much better when you look at REITs, because you have long-term contracts.
Understood. So we talked about what all different types of REITs are there and how one can invest in, but how do actually REITs raise capital?
So there are multiple ways in which REITs can raise capital, but I think I'll take a step back and just spend a couple of minutes just saying how the cash flows in a REIT work. So today you have the REIT which is listed, and you have the assets which are sitting in the SPVs below. So SPVs are special purpose vehicles. Generally in real estate, assets are owned in companies, which we call special purpose, because they are meant to house that particular asset. So therefore that's the terminology which is very often used, SPVs. So you have every asset which is sitting in one SPV. The rent is generated in the SPV, and the rent is upstreamed to the REIT in various forms. So say the rent moves up in form of dividend. So the company makes profit like any other company which is holding real estate asset, and the profits are then streamed to the REIT in form of, say, dividend.
Correct.
So the REIT distributes all the dividend to the unit holders. Now under the REIT regulations, 90% of the cash flows need to be distributed on a semi-annual basis.
Correct.
Now, today, almost all the REITs and InvITs are making distributions on a quarterly basis, though the regulation mandates half yearly, but everybody is doing quarterly.
Why is that so?
It's just to give regular income to the unit holders. So instead of waiting for half year, because cash flows are getting generated every month, so on a quarterly basis, and any which ways all of us draw financials on a quarterly basis, so it just becomes so much more easier to distribute.
Got it.
Now what happens essentially is when 90% of my cash flows are distributed, so today I'm not left with any cash flows if I want to, say, grow. If I want to do more development within the existing portfolio, or I want to acquire assets. So all of us therefore have to raise capital consistently to grow our portfolios, both organically. When I say organic, I mean having further development within the assets which we have. Now there are two ways in which I can raise money. I can raise equity or I can raise debt.
Correct.
Equity, obviously there are multiple ways in which I can raise equity. I can do follow-on offers, which is not enabled today, but I'm hoping that at some point in time that will be enabled. So you can do a follow-on offer, you can do a QIB, you can do a private placement. Like the way you do for a normal listed company, you can raise equity in the same format here. Now comes to debt. Now debt can be raised at two levels. You can raise debt at the SPV level because the assets are sitting there, or you can raise debt at the REIT level. You raise debt at the REIT level, give that money in form of debt to the SPVs to fund the construction.
Okay.
Or if you want to buy another asset, most of the REITs purchase SPVs because that's a model in which real estate works. Now the only challenge here is today, the Reserve Bank has not allowed banks to lend at the REIT level. They're allowed to lend at the SPV level, but not at the REIT level.
Why so?
I think it's just to do with initially, I think there were doubts whether a trust can borrow or not.
Okay.
But I think they have allowed that for infrastructure trust. I think it's a matter of time when they understand how the REIT model works. But today as things stand, so we can issue bonds, and that's what most of the REITs are doing. So we can issue bonds and raise money, and these bonds are generally subscribed by mutual funds, insurance companies, pension funds, corporate treasuries.
Got it.
They can. So that's again a form of raising money. So essentially debt, equity, these are the two ways to raise money.
And so when we talk about how exactly they can raise money, is there any particular risk which is involved for an investor in terms of a REIT being able to raise more capital for another particular real estate, for a particular asset class or not?
If you say, you're raising money and buying asset class,
Yeah.
I think you will go through same sort of a due diligence. And what is the occupancy of asset class, whether it can it can support the debt levels, whether it has a distribution, and it's very, very important then when REIT is buying asset class or asset, I would say, a commercial REIT, let's say, wants to buy an office.
Yeah.
So why they will buy that office? One thing is it has to be accretive. When I say accretive means either it increases the distribution capacity of a REIT, then only they will buy it. Suppose they are distributing 6%. Now unless until after buying that asset, the 6% goes up slightly.
Yeah.
There's no point in buying that. So every buyout has to be accretive in terms of distribution, ideally, and in terms of net asset value also. So in very plain and simple terms, I would say people will like to buy at discount, and they will not like to overpay. So one risk is that you overpay. Other risk is probably, and I mean these risks are there. I'm not saying these are happening, so you can overpay. You can buy an asset which is probably in long term is not a great asset. Occupancy will fall down. It's not a well managed assets.
Right.
So that could be one risk. Third risk is that that asset is in a micro market, which is not growing. Tenants finally decide we don't want to be in that micro market. So I think these 3 or 4 risks could be there, but I think it's a job of the people who are managing REIT, who are making investment decisions, to ensure that these risks are mitigated.
Yeah, in fact, just 2 points to actually talk about the strengths of this product, keeping the risks in mind. So there's a very strong governance structure which SEBI has put in place, and one of the things is you cannot borrow more than 49% loan to value, which we call gearing. So if say your portfolio value is $100, the value of your asset, say your building is worth $100, you can borrow not more than 49%. And even to get to 49, if you're crossing 25, then you need to go to unit holders for approval, and you also need to have a rating. Only then you can even go beyond 25%.
Got it.
So SEBI has made sure that your leverage is kept under check. So there are certain, I would say, safeguards which are already built in the regulation to make sure while these risks exist, you also have, I would say, safeguards to mitigate those risks. And just when we're talking about, of course, one risk is the tenant just walks away. But I think we have seen the cycle, we have seen the worst of cycles. We've gone through 3 years of pandemic. Even during the pandemic, where almost every business was going through, almost dried cash flows, office assets were the only asset which got 99% plus rental income. While we saw occupancy over a period come from, say, historically it's been 95%, came to 85. It didn't go below that. But from the 85%, we got almost 99% of our cash flows. So that's a kind of resilience that office as an asset class has shown during the worst of times. I don't think anything worse than a pandemic could have ever happened.
So exactly, in a COVID-like situation, do rental incomes also come down? Because that would impact the passive income for a unit holder, right?
True. So like what Preeti said, we were at, most of the good institutional players were at 95% plus occupancy. And then during COVID, like what she said, first 2 years, we are not impacted. We could collect all the renters. Occupancies were slightly, kind of maintained. And then after 2 years, there was an impact on occupancy. Now it's getting corrected actually. The occupancies are going up. But yes, 95% came down to 85%. So to that extent, yes, 10% of the occupancy loss was there. But the impact was not very large for a couple of reasons. One thing is whatever 85% tenants, they were paying their rentals without any delay. So while we had a 10% loss in occupancy, but the existing tenants kept on paying their rentals. That is one. Then almost all tenants kind of did not go back on their contractual escalations. So we have a 5% on an average escalation every year. So that was also something tenants were honoring.
So that was happening for those 2-3 years?
Yes.
That was happening. That was happening. Tenants didn't go back actually. While yes, there was a bit of an impact on occupancy, which is kind of get corrected.
But the rental income impact wasn't as
rental income impact was not there. Even the escalations kind of tenants honored. And some of the tenants who did take space, they were taking space. So there was an impact, but not very fundamental or very large. So that's the beauty of office REITs, and even retail REITs, the impact was slightly more, I would say, but not earth-shattering.
Got it. Do you think there can be any other situation where there might be an occupancy risk which becomes too high at one particular time, or a rental income changing risk?
I do not see a systematic risk, so I do not see that across REIT portfolio, people will stop paying rents or occupancies will go down or vacancy will go up. That's unlikely to happen. And for a couple of reasons. One thing is the assets in REITs are top-notch assets. As Preeti said, some of them are individual buildings, but largely they're campuses from which multinational companies operate. They operate 24/7. These assets are pretty well managed and they have best of the tenants whose businesses are growing. You know, I don't see that risk, but yes, there's a possibility that one particular asset, you know, if it's not in a great micro market, if it's not well managed for whatever reason, if it's not well managed for whatever reason, or if in a particular asset there's one large tenant who is there and he moves out, and till the time that asset is backfilled, you know, those risks we can talk about. But you know, the impact of one asset on an overall portfolio, I think that would not be very large.
Okay. Normally in a portfolio, how many assets would a REIT hold?
Typically, I would say we have 3 office REITs and the number could be anywhere between 10 to 30. This number can go up also. There's no minimum kind of a thing, you know, you can have. But generally, as of now, they are 10 to 30, depending on the size of REIT. It could go up to 50 also, 100 also.
Got it, understood. So while we were talking about these SM REITs, they've been in the talks a lot. And more so after there has been a talk of having a separate governing organization for them, which is being called SRO, right? So could you tell us how that will help with more transparency when it comes to SM REITs, given the risks also we discussed about them?
So let me first explain what's the purpose of having these SROs. So we have an association for REITs, which is called the Indian REIT Association, who we represent.
Correct.
Similarly, InvITs have another association called the Bharat InvIT Association. And therefore, SEBI is contemplating a similar association for SM REITs as well. The reason to have 3 different associations is simply because the nature of the instrument, while the framework remains the same, the nature of the instruments are different, and each instrument, each kind of asset class which is sitting in those instruments will have their own nuances, and therefore the need to have 3 separate associations. Predominantly, if I were to look at what are the key things which an association would do, I will segregate in 3 buckets. The first is creating awareness of the instrument and helping the instrument grow. So how do you make sure that the instrument is reaching out to more and more participants? How do you make this instrument more popular investment instrument? So that's the entire piece of awareness, education, which we look at. The second part, and a very important part, is governance. So today, obviously, we have a very robust regulation in place, but obviously every regulation keeps evolving, you know, as the market dynamics change. You need to keep relooking at those regulations and see what changes do you need to get to the regulation to make them more and more, I would say, protective for the unit holders. So the whole governance piece is the second thing, and the SEBI's, I would say, directive is that we as the associations make sure that all the REITs are governed in the manner that they need to be governed, and how do you keep enhancing the regulation such that it becomes far more protective for the end unit holders. So we keep coming with a lot of things. Just to give an example, how do you standardize the reporting? How do you standardize certain regulatory compliances so that it becomes easy for an investor? So now those are the aspects which we as an association take on ourselves to make sure that this is a kind of structure we provide for the REITs. So this is a governance aspect, and the third aspect, which is the policy advocacy. The regulations have to keep evolving as, you know, the nature of the assets change, new instruments are coming, new asset classes come. We keep constantly looking at the regulation, and we in fact work along with SEBI, giving them inputs as an association as to what changes do we need to get into the regulation to make them far more friendly to the investors who are investing into these instruments. So these are the 3 essential elements on which the associations are working on.
So do you think like having a separate association, a separate organization for SM REITs will also increase investor trust in this particular instrument?
Yeah, I mean, I would say a separate association is kind of required for the reasons what Preeti said.
Correct.
And of course, these associations' purpose is they would kind of, you know, help in building a trust. If I'm a REIT manager and I'm talking about REIT, that becomes a related party kind of a discussion. You know, I'm talking about myself.
Yeah.
But when a independent body, of course, it's, you know, it's a combination of all REITs. But when they are talking, then it becomes a bit of a neutral kind of a platform and looks independent. And they're promoting not one individual REIT or one individual kind of entity, but industry as a whole. So definitely that builds a trust. Second thing is what regulator has mandated. If any complaint, any REIT or SM REIT would get, they have to be taken to the, this forum actually. So that again, and they have to ensure that these companies are kind of a solved, or they have to be kind of closed down. So that also kind of creates a trust. So definitely these bodies create a trust. They give a sense of comfort. They give a sense of confidence, and these bodies become an industry spokesperson. And when they approach the regulator also views very, very differently, because this means industry constituents or companies already discussed that, hashed about, and what is important and what is relevant.
Right.
That is being taken to regulator. So that's where I think it really helps.
Got it. Understood. Also, when we talked about various risks that a REIT can be exposed to, another thing that I wanted to discuss was interest rates, because they have been rising globally. So what sort of a impact does the interest rate increase have on the valuation and performance of REITs in India?
No, I think that's a very relevant question, I would say, and I would make a small modification here. Now interest rates have been rising, and now I think they expect to decline actually. I think
but
so
with India, we really are not sure what's going to happen for the next few.
I think they're not definitely rising, definitely not rising, and
stable.
at least I feel, of course, Preeti can have a different view, that they are going to kind of a decline as well actually. So that's one thing. It looks like very, very short. How and when, that could be a matter of time, but I think decline is certain. If the interest rate rises, this means your distributable cash flows are kind of go down, because whatever income you get, you have to first pay the interest, and then whatever is balance is left, you distribute. So definitely you're right. If the interest rate goes up, your impact in terms of distributable cash flows or income stream would go down. It can impact the valuation.
Right.
Third thing is also like in US, because interest rates are high, companies are not investing. Companies are not kind of growing. So that's why if a lot of companies are not investing in IT. That's why last 2 or 3 years IT companies have seen bit of a slowdown. So these are the risk factors. But how we are mitigating these risks? So one thing Preeti already said, there's already a cap by regulator that your loan to value cannot be more than 50%. So that is one. Second thing is all REITs have taken a kind of a soft kind of a commitment that they will not take their loan to value beyond 40%.
Okay.
While 49% is a cap by regulator, but all REITs have taken a decision that they will not take it, soft commitment, soft decision, they will not take it beyond 40%.
Got it.
And even in that case, if you see the loan to value of most of the REITs, somewhere it could be early 30s or mid 30s, somewhere it could be as low as, I would say 15% to 20% or early 20s. So when the loan is less, debt is less, definitely the impact of rising interest rate on distribution is there, but it's kind of a limited. So that is one. Then also, what we discussed, most of the REITs are managed by large institutions. They're very smart and agile and a lot of experience in their, kind of a capital managing strategies. Most of these companies manage their interest rate also pretty well. Of course, there's an impact, but it gets mitigated.
Got it.
So I'll just, talk a few minutes on the other side of the story. While interest rates do create a little bit of a challenge, if you look at the history, US history, which we have for 60 years, in 8 cycles overall, when the interest rates went high, in 5 out of the 8 cycles, the REITs have actually outperformed. It's only in 3 cycles that the REITs have actually underperformed. And that's because REITs always looked as hedge against inflation. So what happens is essentially when the interest rates are rising, essentially there is high inflation, and that's the reason you are seeing interest rates rising. Your rentals also keep rising. And that actually, in a way, becomes a positive. So on the negative side, as Alok mentioned, there obviously some of your cash flows do get negated because of the larger interest payout. On the other hand, because of inflation, your rentals actually move up, and therefore the valuations actually move up because your rentals are moving up along with inflation.
Now, if we talk about the governance part of it, because when you were talking about SM REITs and about the new organization, both of you paid a lot of emphasis on how the governance part of it would be taken care of. So if we talk about regular REITs right now, What is the governance structure like? How is it different from, let's say, any other listed company out there?
Let's just look at how these regulations came into being. It was in 2008 that SEBI started talking about, a REIT in India. And obviously, one set of regulations came into play. But obviously, those did not work and then went through many iterations. And obviously, in 2014 is when India got the REIT regulations. And our REIT regulations are actually drawn in line with international REIT regulation. And to a large extent, they actually mirror Singapore REIT regulations.
Okay.
So if you'll see a lot of similarity between the Indian REIT regulations and Singapore REIT regulation. In Singapore also, the REIT phenomena happened only in early 2000. So it was, I would say, relatively
not that much
younger
market when we wanted
Correct.
to.
So therefore, I think in terms of compatibility, so to say, this was the closest. So that's the reason our regulations are largely mirroring the Singapore REIT regulation.
Understood.
Now, if I were to talk about some of the strong governance aspects vis-a-vis any other, say, listed company, first and foremost, these are instruments which require at least 80% of your assets should be completed and rent generating. So that's the, I would say, the biggest mitigating risk factor, because today your portfolio, you cannot have more than 20% which is under construction.
Right.
So therefore, automatically the development risk or the leasing risk which you carry when you have a development portfolio, it's automatically mitigated because 80% is rent generating. So I think that's one big differentiation between a normal real estate, listed real estate company versus a REIT. So that's one part of it. I think the second thing is, as I already mentioned, 90% of your cash flows need to be distributed. Correct. So therefore, you are getting regular income. There were some very strong related party governance standards which have been put. So say, for example, how do the REITs grow? They buy assets either from the sponsors or from the third parties. Now, whenever there are related party transactions, say when you're buying an asset, you need to get at least 2 valuations done. You can't buy an asset for more than 10% of the average of the 2 valuations. If you're giving units against the asset which you're buying, then you need to, which is effectively called preferential allotment, you need to go to the unit holders and seek their approval. And when you're seeking the approval, the majority of minority vote and the related parties cannot vote. Now, these are things which are very specific to a REIT, unlike any other listed companies. I think that's another, I would say, comforting factor for any investor who's generally worried about related party transactions.
So are these mandates higher because of the awareness issue, so that people have more trust in REITs, or is there some other reason?
No, I think it's because these instruments are meant to be, I would say, low risk instruments. Right. So therefore, that safety net needs to be created so that investors draw a lot of comfort because of the regulation. So we give out valuations. So if anybody wants to understand, if say the price of the unit which is trading is say $100, we actually tell while it's trading at $100, a net asset value, which is the worth of that one unit, is say 125. So anyone investing knows, oh, the worth is 125, but it's trading at 100.
At a discount,
so this is a spread which is available. You know, simplistically, every listed company gives an annual report.
Right.
We give those reports twice a year. We give it half yearly. So that's again a requirement which is very specific to a REIT. So these are some of the tighter governance aspects which are very peculiar to REITs. You don't see them with listed companies, and that's the reason we say that besides the quality of asset and 80% being rent generating, some of these governance aspects make these instruments far safer instruments as compared to a normal equity instrument.
Got it, understood. So now let's, I think, move to taxation, because this is another interesting bit that I feel everyone should know about. So how is income from REITs taxed in India? If you could start with the base and then we'll pick up from there.
As we talked about, return in REITs has 2 components. One is a regular distribution,
Correct.
one is a growth. So let's take about regular distribution. Now regular distribution has, I think, 3 components. One is a dividend distribution. Now dividend distribution in India is not taxable, that's tax efficient. So that's advantage which dividend distribution from REIT has as compared to other listed companies.
Correct.
That is one. Second thing is return of capital. So your income is distributed through dividend distribution I talked about, return of capital,
Correct.
which is also tax efficient, and then there is a interest income.
Correct.
Interest income is taxable at the marginal rate of income tax for investor. So this is how the regular distributions are taxed. And then there is a capital gain, which could be short term and long term.
Correct.
Now that is aligned with equities. So long term after a year it's 12.5%, and short term before 1 year it is 20%. So that is how it's taxed. Preeti, have I missed out something?
Yeah, if you look at REITs globally, they all of them have single level taxation. So when I say single level taxation, essentially it means either you are taxed in the hands of the unit holders or the REIT pays tax. Because these are income generating instruments, the moment you have two level taxation, obviously it leaves very little residual income, and then they become very unattractive instruments.
Correct.
So across the globe, there's only single level taxation for REITs. Now this is a special framework, tax framework for REITs globally. So either in some of the jurisdiction, the REITs are taxed, in some of the jurisdiction, unit holders are taxed. Now in India, you therefore have single level taxation even for REITs in India. Now the SPVs, which actually own the asset, they are the ones who pay corporate tax, and when they distribute dividends, they are not taxed in the hands of the unit holders.
Correct.
And the REIT is a pass-through entity. So REIT doesn't get taxed. It goes straight away in the hands of the unit holders, and unit holders don't pay tax on dividend. I think that's a very, very big fundamental difference between a listed stock and REITs.
So if we compare to an equity or like a listed company, the tax treatment is more favorable in REITs for a unit holder, and it is also more favorable if you look at any other real estate options, right?
Obviously, because today the fundamental question is if the income is getting generated at the operating asset level, and if that is getting distributed in form of dividends, then obviously the fundamental question remains taxability. And REITs are instruments which actually let you have those distributions in form of dividends. As Alok said, interest is taxable, of course, but dividends which are coming to the unit holders, those are not subject to taxation.
Got it, got it. And even though we do not have residential REITs in India, but if we compare, let's say, to the US markets, are commercial and residential also taxed similarly?
Similar.
Okay.
So REITs, the taxation is on the instrument, and whether the asset class is A or B asset class, the tax treatment remains the same.
Got it, got it. So for any retail investor who is trying to actually enter into the market to understand the REIT space, how would you advise them to go forward with?
Right now there are, as we said, there are 4 REITs. 3 are in office, 1 is in retail. One can kind of do a bit of a due diligence. I would say all 4 REITs are great, but somebody still wants to do their due diligence. They can see what are the occupancy levels. They can see in which geography these assets are. You can also see what kind of a tenant profile these REITs have.
Right.
And then you can, kind of choose one of them or 2 of them or 3 of them, and or you make a basket of them. I would say all 4 are good. Start somewhere, keep increasing your portfolio. It is not this A versus B. It has to be part of your core portfolio. Start with a small corpus, keep building it up.
Right.
You will get some comfort. You start seeing your income kind of getting built up. That will give you more comfort. Right, the cycle. REITs are in infancy. You have decades to go. So you will see the portfolio income kind of growing up over decades.
Right.
Start, I would say, now.
Right. Also, since Preeti mentioned that most of our regulations are basically mirroring Singapore REITs regulations, do you think are there any positives about some regulations, let's say in the US or the UK, which does not exist in India right now, which we can actually mirror?
And good question. I would step back, about 10 years back, when REITs were under discussion stage. I would honestly tell you, I was slightly nervous. I was nervous, and I was thinking, there was so much people talking about REITs, and I was thinking, so many people can come into market and launch their own REITs.
Right.
But what I've seen, regulator has done a fantastic job of ensuring that well capitalized.
Yeah.
Sponsors with track record, sponsors who have experience in real estate, they only come to market, they only launch their REITs, they have great assets.
Right.
So I think sponsor has taken care of. I don't think there could be one bit here and there, that's a different thing, but largely we are very well covered in terms of regulations, in terms of compliances, in terms of governance. We are very well covered. That's a great job regulator has done.
And just in fact, to add to what Alok said, very recently, about 2 months back, SEBI has in fact created these data benchmarking institutions, which is an extremely, I would say, friendly data benchmarking platform available to unit holders before they are investing. So you have 3 agencies today which are offering these platforms. So you have KFinTech, you have CAMS Online, and you have CareEdge. So these are the 3 platforms which actually have created a database of all the 4 REITs. To start with, it's a REIT platform, and I'm sure it'll get extended to infrastructure trusts also. So all information about every REIT is available at one place on those platforms, and all the 4 REITs are compared on several parameters. You have valuation models which are available for unit holders to try if X parameter undergoes a change, how will the valuation change? And there's a lot of information, quarterly results, operating data, which is compared REIT by REIT on a single platform.
That's a really good initiative.
Yes,
for that
absolutely.
matter. So right now, currently in India, which are the major cities that REITs own assets in?
When you talk about office, you know, 90% of the office is in grade A or tier 1 cities. And when I say, quickly, if you say it's Bombay, Pune, it's Gurgaon, Delhi, NCR, it's Calcutta, which people consider grade A, grade B both, and then Chennai, Bangalore, Hyderabad. So 90% of a commercial office is in these cities. So office space, office REITs are largely in these cities. Retail could be in some more. It could be, it's about retail REIT what we have. It could be in tier 1 and tier 2 cities.
Do you think we can also see an uptick in the gift cities since more and more office spaces are being opened there?
Gift city, I am not sure. How does the taxation would work out? I mean, it's a foreign
Yeah,
land,
because the taxation in gift city for the companies who are there does not work according to the Indian taxation. So how would REITs work in that space?
So there was a lot of ongoing discussion whether REITs should be allowed to list in GIFT City, so that you can have FPI investment coming directly. I'm assuming the compliances are much lesser, and I wouldn't say that there is the same tax structure prevailing today. For REITs, if they had to do, then they would have had to replicate a similar tax structure in the GIFT City also. But I think those are still very early days in terms of whether you should have REITs, getting listed on the, or you can do something like you have this ADR, GDRs, depository receipts. So these are all discussions which we keep hearing about. But I think it's still an evolution. REITs honestly have to really grow big within the country before you start looking at REITs in GIFT City. So I think it's an evolution. Regulations are also evolving. I think the regulators are seeing the need of the instrument, need of the investors, and then accordingly taking decisions as to what needs to be done to make the products larger.
Got it. So as of now, you cannot have a REIT.
Today, you cannot have a listing
in GIFT City.
In the GIFT City.
Also, on that note, can a retail investor invest in a REIT outside India, or like vice versa also?
Not in Indian REITs, because Indian REITs are listed on the domestic stock exchange.
No, right. Can I invest in a US REIT, or can an American invest in an Indian REIT?
Yeah, of course. Of course. You have non-residents investing in Indian REITs. You have FPI money coming into Indian REITs. So that, of course, happens. Similarly, if Indians want to invest in listed stocks abroad, I'm sure, of course, there are a set of FEMA regulations to follow. But otherwise, yes, you can.
Got it, understood. Also, even though we're talking majorly about REITs, but we also touched upon InvITs, because if we talk about the global scenario, you mentioned that it's considered under REITs as well. So for any person to understand InvITs or REITs, what according to both of you is easier to understand and get hands-on?
The Indian REIT Association has done a lot of knowledge programs which are available on our website, which actually explain what REIT as an instrument is. So I think if somebody wants to make an investments and want to actually just understand what these instruments are, they can just go across to our website and see what exactly these instruments are. Similarly, I talked about these 3 data benchmarking platforms. Even if you can go to those platforms, they also carry a lot of information about what REITs are, about each of the REITs. So I think some amount of education can happen that way. And then, of course, you have experts in the industry who know enough about REITs and InvITs. There are various channels to even approach them. So I think, but if somebody wants to understand the basics of what a REIT is before making an investment decision, then I think there's enough of material which is available on the IRA platform also for them to
And also hopefully now people will listen to this.
And absolutely, yes.
Absolutely.
Of course, through your channel, it should be possible for investors to understand the product better.
So just to add to what Preeti is saying, my sense is both are fairly easy to understand, but you know, and don't get me wrong, I think real estate is slightly closer to at least retail investors, I would say, you know, as compared to infra. So understanding at least office REIT, retail is fairly simple actually. You see the tenant profile, you see, you know, leases, you see the rental actually, and then what's the rental you can collect actually. I think REITs are fairly, maybe I have a bias, but are fairly simpler, I would say.
Right.
Both are easy, but REITs
because these
probably
sorts
simpler.
of real estates almost everyone can understand, and
Yes.
even not, it's very commonsensical to understand these sorts of things. So
Absolutely.
it's easier to grasp in
Absolutely.
terms of that.
Absolutely.
So what is the a broader, big perspective, since we're talking big perspective, what is the big perspective outlook on the Indian REITs industry that you both have?
Yeah, so as I said, we have just 100 million square feet in the REITs, that on the office side. Today we have inventory of 400 million square feet, which is REITable. So you're talking about a 4x growth with the available stock today, and we keep adding 40-50 million square feet of office space each year. Similarly, if you look at the retail asset class, you have about 10 million square feet today under REIT. Today the inventory is almost 70 million square feet, so you're talking about a 7x growth there. We are only talking about the two asset classes which are currently in existence, but there are several other asset classes which can actually find place in the REIT framework. Be it, as I said, student housing, it could be data centers, it could be warehouses, and so on and so forth.
Right.
I think also a very important aspect is that while these are the existing asset classes, obviously InvITs have a whole lot of asset classes, and there are a lot of REIT assets which are even held by the government. Government also can effectively use the REIT platform to monetize their asset, because government is also running a monetization program, and these instruments can be effectively used by them to actually monetize the asset, because there are several real estate assets which a lot of government undertakings are sitting on. So you can actually work on various models. I'm just giving an example for sale a lease back model. So there'll be several such models which can actually be used to monetize those assets and recycle capital, as I said. And that's in fact one reason why you have seen PSU InvITs like NHAI, Power Grid. These are two government InvITs which have done very well on the InvIT space. So I think there's a huge, for a country like India, where there's so much of growth potential, I think there is huge potential for REITs also to grow.
So I would say two things. One thing is that India will continue to be office to the world, and for India to be continue to office the world, they need almost more than 100 billion square feet of a office space every year.
Right.
That is possible that if, you know, existing office space move to REIT and the capitalists get freed up and more, you know, that capital is deployed to generate more and, you know, smarter offices. So that's one on office side. Second thing, as I feel, is that, you know, REITs is an instrument, you know, between debt and equity, and great instrument to create passive income. So there's so many people who need passive income, and I think that is where REITs can really play an important role. And I see those you know, investors, you know, presently going for, which are about, let's say retail, they are 3 lakh, you know, going in leaps and bounds, and that is when, you know, we would say REITs have really arrived.
Right.
So we just started off with just about 7,000 unit holders way back in 2019 when the first REIT happened. And today we are up of 250,000, but again that's very small as compared to almost 4 crore unit holders of mutual funds. So I think we have a long journey to go, but that just talks about the potential. And our effort is to just make sure that REIT becomes a household investment instrument, that everybody who's looking at investment in a mutual fund or equity should also have REIT InvIT as part of their portfolio allocation. We're not talking about REITs replacing any other form of investment, but this is also a good balance in terms of the portfolio allocation, diversification, and you know, this is a moderate risk, moderate return. So in fact, it's a hedge against volatility. These are very low volatility instruments. So actually it helps you mitigate the risk of you know, investment in a way.
Right. Again, going back to the point that Preeti had mentioned initially, that we are, in terms of our regulations, mirroring Singapore. Do you think with how the regulations are framing up in India, India can be a benchmark for other emerging countries for their regulations around REITs and InvITs to be set around?
Why not? Why not? I mean, so that's I think, why not? And I'm sure that would be happening actually. That's going to happen if REITs are going to come in, more countries who look at India as a, capital market kind of a story which has panned out, which is successful. I'm sure that get followed.
So as a part of that question only, what is it that we are doing better than the already matured markets in terms of the regulations around REITs?
Some of the nuances which we have here in terms of, I would say, reporting or the investment guidelines, I think some of them are even tighter than what you see globally. And as we go, every quarter we are seeing some or the other reforms which are happening in the regulation on two fronts. One is creating a more conducive environment for these instruments to grow, but at the same time just making sure that the investor protection is getting better and better by the day.
Right.
So I think SEBI has done a wonderful job, and in the last I would say, well, it's a decade-long journey from 2014 to 2024. Essentially 5 years when you've actually seen REITs come up. There's lots which has happened in terms of the regulatory reforms which have come. So I think SEBI is also understanding the nuances of these instruments, what more needs to be done for the instrument, both on investor protection as well as growth, and trying to make sure that while these instruments grow, but at the same time, there's enough to protect the unit holders, because these are relatively new instruments in India, and there's a lot of education which is still happening, and therefore SEBI also has been cautious that anyone coming in, putting in money should be so well informed, and at the same time should have so much of access to data that they can take very well informed decisions.
Right, absolutely. I would want to have both of your perspectives about everything REITs. What is that one or two lines you would want to end the discussion with when we're talking about REITs?
So I think my only wish list will be that REITs actually become a household investment instrument. People need to understand how good an instrument it can be in terms of your overall portfolio investment strategy. So, and I really look forward 10 years that, we're not going to talk about some numbers in lakhs.
Right.
But I think we should start talking numbers in millions now going forward.
Today, Indian GDP is about 4 trillion and real estate assets are about 300 billion.
Okay.
In 2047, when we talk about Viksit Bharat and 100 years of independence,
correct,
Indian GDP would be upwards of 25 trillion,
right,
and real estate assets would be between 4 to 5 trillion. So see the kind
equal
of
to what the current GDP of the country
actually
is.
That's a very good kind of an analogy. So just see the kind of a real estate assets growth is going to happen, and I would like to say it should be led by REITs actually. REITs should be in forefront of leading this growth in India.
Right.
That is what we would be looking for.
Right. With that, let's wrap up this one REITs 101 session with both of you, and thank you so much for taking out the time and explaining and catering to all our dumb questions that some of mine and some I would say we got from our viewers and subscribers. But yeah, that was a really insightful session, and I'm sure people would understand REITs, the difference between REITs, SM REITs, InvITs also better, and how does India actually stand as against the rest of the world, and hopefully understand it enough to invest in another instrument in their portfolio.
Thank you for having us here,
Thank you.
and it's been a pleasure.
Thank you so much. The pleasure is all ours.